Bloomberg Quint, this is First Word.
Curated and presented by Bloomberg Quint's senior-most editors. Weekdays at 8 a.m.
Good morning, you're watching DayBreak on Bloomberg Quint Live and I'm Alex Matthew. First, let's look at the headlines. Asian markets have opened with healthy gains this morning as investors take heart from the latest economic data. Now, most brokerages and economists see another rate hike after the RBI makes its intent clear that on staying focused on inflation. The government decides to initiate a probe into the recent spate of resignations by statutory auditors. And the National Company Law Tribunal admits a Bank of India's plea seeking to declare Videocon insolvent. Well, European markets faced a fresh bout of volatility on Wednesday after two top policymakers delivered confident remarks on the Eurozone economy, bolstering expectations that the European Central Bank will halt its bond buying program later this year. The ECB's chief economist Peter Prayat said the Eurozone economy's underlying strength had bolstered his confidence that inflation would move towards the central bank's objective, highlighting the view by policymakers that the recent weakness is only temporary. Listen in.
It's clear that next week the Governing Council will have to make this assessment, the assessment of whether progress so far has been sufficient to warrant a gradual unwinding of our net asset purchases. And in making its assessment, I think it's very important to consider the underlying growth of the economy and to what extent actually this growth assessment that we have, the underlying growth, the assessment that we make, is passing through to wages and price formation. Because at the end of the day, this is our mandate, it's price. So you make an assessment, you have a monetary policy which is very accommodative. You have a communication on the asset program which says that part can stop at some point, but following an assessment. And the assessment, if that assessment, which is basically whether sufficient progress has been made, etc. Now I go a little bit into that. Basically the three criteria that we have, we call it convergence, confidence and resilience. And that will be next week the Governing Council work to do. And that's what I'm preparing. Now, on convergence, you have, first, headline inflation must be on course to reach levels below but close to 2% in the medium term. So you have to make the assessment, not that inflation today that you have reached the objective. We also say you need to be patient. It will take time. But you must first see a path, given the evolution of the economy, the closing of the output gap, some of the price pressures you see, for example, on the labor market now, the fact that capacity utilizations are high, the fact that economic conditions are good in spite of some slowing down of the economy, that sort of assessment, you have to see if the path of inflation that we have in our projection you make an assessment on this.
All right, and with regard to those statements by him, he essentially said that the first meeting to decide on when to end the monetary policy stimulus that they had, the bond buying program, would soon take place. And that had a bearing on the markets as well. But let's turn to the US markets. Wall Street indices rallied on Wednesday with help from financial stocks as investors eyed strong economic data and trade war fears took a back seat while the Nasdaq registered its third straight record closing high. Abigail Doolittle of Bloomberg News wraps up Wednesday's Wall Street session in this report.
Stocks rallied in Wednesday's Wall Street session with the Dow leading the way on strength from several sectors, including the financials, the industrials, and the materials. The Dow climbed by 1.4%. Its best day in more than a month. The S&P 500 gained by 0.9%, and the tech-heavy Nasdaq was up almost 0.7%, but for its third record closing high in a row. Now, relative to banks rising on the session, there was a tailwind from rising yields. The 10-year yield up about 5 basis points. That helped JP Morgan, Bank of America, Citigroup, and others climb on the day by more than 2%. So again, a real rally for that sector. The industrials strong as well, helped out by Boeing, 3M, United Technologies, and Caterpillar. Lots of strength there as trade tension fears ease going into this weekend's G7 meeting. Interestingly, though, there was some weakness for some of the big well-known tech names, internet names, I should say, including Facebook, which was down after the company did disclose that shared data with certain Chinese companies. We also had Alphabet and Amazon slightly lower, somewhat lower on the session. Outperformance, though, from Tesla, up nearly 10%, its best day since 2015 after CEO Elon Musk did say that it was quite likely that the company would hit its production goals of 5,000 Model 3s per week by the end of this month. And when you put the gains, the rally in stocks, together with Haven bonds and the Japanese yen selling off on the day, it really does tell us that Wednesday's Wall Street session was risk on. In New York, Abigail D. Little, Bloomberg News.
All right, we have David Inglis, who is live from Hong Kong with us. David, the message from the US is that there's a risk-on tone. Seemingly that's the case in Asia as well, with the markets that have just opened up in China as well.
It certainly is. It is a risk-on tone, I think, by looking at just the complexion across asset, where you have equities on the way up, the dollars being offered up against Asian FX, and quite clearly, I think it's one of those rare days when it is fairly straightforward, that inverse relationship between bonds and equity. So yields are pushing higher. I'm looking at least the biggest moves so far are those coming out of New Zealand and Australia, with the 10-year in New Zealand up by 10 basis points. It's now back above where we are for Australia, which is at 284, 285 there on the Kiwi 10-year. The US 10-year is also pushing a little bit higher, but the sort of big move was what we saw overnight into this morning. 4 basis points there, 270, 297, 298 there. And of course, a lot of it simply comes back to the fact that it was building up, that the US dollar rally seemed a little bit, I guess, overdone, just judging by how left behind some of these other currencies were. And I think, you had a series of good data coming out of the U.S., and then you had that hawkish tilt, of course, on expectations of what the ECB meeting next week might hold. That was enough to nudge money back out of the dollar into the likes of the euro, which is trading essentially at the highest levels here in about 3 or 4 days. We'll talk more about that a bit later on as far as the bond markets are concerned. Now, just very quickly, though, overall equities are up, give or take about 0.5% here on the benchmark. You mentioned some of these markets just coming online. China, Hong Kong, also some decent gains there. The thing I'm watching, though, when you look at the benchmark is just a little bit more, and we break above that high that we hit back in early May, and that takes us actually above the 3-month range. Whether or not that's a proper breakout or a fake out, we'll have to wait and see. But certainly we're at this point where you had a death cross in emerging markets yesterday. We're a little bit above that at the moment, a reversal there on the weekly chart. You're above the 50-day moving average. So, I mean, I know it's fairly complicated, but in other words, it's a turning point across markets. If we don't turn up, then the downside momentum might just build up, just looking at how some of those indicators broke and support levels broke a few days back. Very quickly, though, as we head into the European session later on, bunds, of course, very much in focus, as well as peripheral Europe. So Italy seems to be put aside for the moment, and we're back to where we were, I guess, 3-4 weeks ago, with yields in Europe and core Europe pushing up. So that's something to watch, of course, over the next few hours or so. Back to you guys.
All right. Thanks so much for that, David, for that comprehensive view across markets. Let's head to India now. Darshan Mehta and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Darshan, at least the SGX Nifty indicating a positive start, positivity across the board.
Yeah, it is. Today, I think everything's decent. The SGX Nifty is positive, global cues are positive, commodities are positive. Let's take a look at the SGX Nifty. Opening up about the 10,700 mark in trade. So yesterday was a strong session for the Nifty, managing to build on to that momentum post the policy. So the SGX Nifty is indicating that we might open on the positive side. Now, how did the ADRs pan out in trade? Most of them did well. Tata Motors, following what happened with the Indian market, was up almost 4%. Vedanta, Wipro, ICICI Bank also managing to inch up in trade. In fact, all the ADRs ended up in the positive bias. Infosys, Dr. Reddy's, HDFC Bank. So it was a good day across for the ADR pie also. Now, overnight crude fell in almost 1.2%, but there seems to be a little recovery that's happening in trade today. Brent crude is at 75.50 and WTI is at almost a $65 barrel per mark. So not big moves that are coming in, but nevertheless positive. LME, a strong close for most of the base metals on the LME, because if you're looking at it, they managed to end with a positive bias. Aluminium was up 1.5%, copper was up 1.7%, lead was up almost 0.4%, tin was up almost 1.5%. So Qs were strong, and that continues in China also, because if you're looking at it, steel is up almost 2%, aluminium is up almost 1.3%, copper is up almost 1.8%. So the Qs are very, very strong on the commodity side. On the precious metal side, it's very, very muted at this point of time. Absolutely no moves coming in on the metal pack. Now, FIs and DIs, what have they been doing in the market? Yesterday, FIs, minuscule amount of selling, 80 crores. DIs were aggressive buyers. They bought in 700 crores in the cash market. FIs on a month-to-date basis have bought in almost 3,200 crores, and DIs have bought in almost 812 crores. But this also includes, the HDFC block that happens, that HDFC Bank FI limit opening. So a bulk of that will happen on the HDFC Bank side. Now, sector-wise and the Nifty-wise, the Nifty managed to move up 90%, but enough bounce back coming in on the mid-cap and the small-cap end of the market. The small-cap up almost close to 2% in trade. Some of the sectors that were in focus, the pharma managed, Nifty Pharma managed to bounce back. PSU banks did well after the policy. It was up almost 2.5%, so traction was seen. Real estate, after so many days of falling, managed to move in higher, and metals also managed to rebound in trade, probably because of the commodity rally. The metal rally may again continue. Wix was down 6% given the big rally that we saw in the market yesterday, and the Nifty was up almost 90 points. What contributed? On the positive side, you had Infosys, ITC, SBI, which contributed. Reliance also contributed, but HDFC Bank over the past few days, despite the FI limit being opened, continues to be a drag on the market. So there is enough traction, up 90 points, but basically it was the other companies that contributed majority of the move. But Agam, what are the FNOQs indicating?
Well, Darshan, a lot maybe have been taken by surprise considering the up move on the benchmark indices after the RBI policy announcement of a rate hike. But we've seen very little in change in open interest for the Nifty futures, but come down to Nifty Bank futures, that's where substantially more traction coming through. After days and days of unwinding, we have finally started seeing an uptick in the open interest, as you can see there. The Wix, of course, was also in focus, considering the indices moved higher, and understandably the Wix contracted by as much as 6% after the event was over. Let's take a look at how things have stacked up in the options market, and as you can see, some more writing coming through around the mark of 10,500 and 10,600. Now, in the near term, this gets in a very, very narrow range between 10,600 and 10,800 odd, 200 points odd in the near term, considering we have seen a lot of activity building around these two strikes. Let's take a look at a stock that's moving into the FNO band, Balrampur Chini, of course, a substantially high open interest build up. And other than that, a few other stocks I'm watching out for. NIT Technologies, after a lot of weakness over the past 1 week, its stock has moved up around 3% more addition towards longs. We also have Reliance Communications, that's also gained as much as 11%, still buzzing, still very active. And well, we also have something like an Arvind. In this case, we have seen some short covering, considering a fall in open interest of as much as 23% even as the stock moves up. So a lot of these stocks did advance, and considering we are looking at a positive opening of the SGX Nifty, we are expecting a positive uptick for some of these counters moving today's day of trade.
All right, thanks so much for that, Agam. Now, the big talking point yesterday was, of course, the Monetary Policy Committee decision to vote unanimously to raise the policy rate by 25 basis points to 6.25%. And that was the first hike in the policy rates, remember, since 2014. And it was primarily because of the indications that inflation is on the rise, particularly inflation expectations indicating that you could see a spike in the May figures itself. Now, the MPC has maintained a neutral stance, though, and that gives it the flexibility to move in either direction and respond to the risks that have emerged in recent months. Ira Dugal sums up the implications of the decision. Listen in.
The morning after the interest rate cycle is turned, there's only two questions you can ask. How long will interest rate hikes continue and how high will interest rates go? Not to say that we have an absolute answer for you on that, but before we get to telling you what economists are saying, important to take a look at the rate hiking cycle and then the rate cutting cycle that followed. We came off a peak of about 8%, went all the way down to 6%, and now we have seen that cycle turn for the first time in 4 years. Rates have been hiked to 6.25%. Pause here for a minute to talk about some of the theoretical issues. The theoretical debate is that if rate hikes have started early on in the inflation cycle, and if the inflation targeting regime has made a dent on inflation expectations in the economy, then could this cycle be a far shorter cycle, at least in terms of the quantum of rate hikes, and could the peak rate rest at well below that 8% mark that we had seen as the peak in the 2014 cycle? Don't have a clear answer to that, but that is worth pondering upon. For now, what economists are telling us is that it will be a shallow rate hiking cycle. That was words used by Kotak Mahindra. India Ratings expects one more rate hike. JP Morgan also expects one more rate hike at least this year, and that could come in October, they said. Nomura expects a rate hike in August and then a pause thereafter. So the expectation is that based on the data available so far, you could see one, perhaps at the most two more rate hikes from here on. Beyond that, it remains data dependent. If that sounds like a cop-out, it's actually not a cop-out. And the reason for that is in this chart. Data is evolving quite quickly on the inflation side. There was a unanticipated steep spike in inflation expectations in the May round of the inflation expectation survey conducted by the RBI. In fact, that was the key reason cited for the hike in rates as well. But what is this inflation expectation spike telling you? Is that going to reflect in actual wage changes and then in changes in terms of the actual inflation rate? We'll only know the answer to that as and when it happens. That's the economic story. How did the story play out on the markets? Again, interesting reactions in the market, and this was pointed out to us by R. Sivakumar of Axis Mutual Fund. The short bond yields actually came off following the rate hike. The reason for that is more technical than it is economic. The RBI has allowed banks to take a larger carve out from the SLR, 13%, and use that towards their LCR requirements, and that gives them a little bit of a liquidity relief. That's why you saw the short bond yields come off. The long bond did see an uptick in yield. So the 10-year yield closed at about 790, which is still telling you that there is an expectation of higher interest rates. There are also, of course, other factors at play here, which is fiscal deficit, global markets, etc. But if anybody was hoping that you would see relief on bond yields or on borrowing costs based on the market cost, that did not happen. You also did not get any relief in terms of the liquidity stance of the RBI. In fact, quite a tough stance being highlighted by the RBI governor, who said that, look, our liquidity injections are going to be driven by the need to anchor the call money rate to the repo rate. So any hope that the elevated bond yields would prompt the RBI to do large-scale open market operation bond purchases, well, that hope is out of the window. That's the sum total of how we've gone through the rate hike, the first rate hike in the cycle.
All right, let's quickly take you through a check on the rupee and the bond market. Ira did tell you a little about the reaction in the bond markets. The rupee staged a spirited rebound after a two-day fall and ended at a fresh one-month high of 66.92, surging by 23 paise against the US dollar. That's after the RBI hiked the policy rate by 25 basis points. A spectacular relief rally in local equities that Darshan told you about a little while back also supported the currency. Now, speaking about the bond yields, the 10-year bond yield understandably headed higher, closing at close to 7.9, at 7.92 in fact, percent, up from the previous close of 7.83%. All right, the President has given his nod to the IBC ordinance, and the ordinance brings in many crucial changes with regard to home buyers' rights in an insolvency process. Dispensation by MSMEs and withdrawal processes for insolvency applications also are included in the ordinance. Now, Payaswini Upadhyay has all the key changes and what they mean in this report.
The ordinance brings in several important changes for the insolvency and bankruptcy code. Right on top of that is good news for home buyers who will now get categorized as financial creditors. They will be able to initiate insolvency process. They will get a seat at the creditors committee table. But how it will work in practical terms, in terms of who among, let's say, the 20,000 home buyers will be represented or will represent the entire category, those kind of challenges will come up, experts say. The second important change is relief for promoters of MSMEs who will now be allowed to bid for their own companies as long as they're not willful defaulters and they do not attract any other disqualification not related to a financial default. The third important change will bring welcome relief for entities like private equity funds. What the ordinance says is that Section 29A that lays down the disqualification criteria for resolution applicants will not apply to pure play financial entities from getting disqualified on account of NPA. And an NPA acquired under the insolvency code shall not disqualify an entity for 3 years. So what it essentially means is, like, let's say a private equity fund which acquires a stressed asset will get 3 years to revive that asset, and in this 3-year period such an entity can still go ahead and bid for other stressed assets. Another important change has to do with the timelines and processes of the insolvency process. This is one of the most litigious area in the ongoing NCLT cases, which is, should late bids be accepted, should late bidders be negotiated with. What the ordinance says is that such late bidders and late bids should not be or cannot be entertained. How much will that weigh on the ongoing cases? Because the ordinance is prospective. So if at all the courts will take cue from the ordinance in terms of the thinking of the legislature, we'll know in the times to come. The final change has to do with the change in the voting threshold. So currently 75% of the COC needs to agree for a decision to go through. That threshold has been brought down to 66% for key decisions, and for some of the other decisions it has been brought down to 51%. And finally, the ordinance clarifies that the moratorium period will not apply to enforcement of guarantees. So promoters and holding companies who may have given guarantees in favor of corporate debtors, those guarantees can be enforced by lenders.
All right, the recent spate of resignations by statutory auditors of companies has got the government's attention. A government official has told reporters that the Corporate Affairs Ministry is investigating the resignations after it received complaints. Nikunj Johri has this report.
The government has initiated investigations against auditors resigning from companies citing inadequate reasons, and the central government now intends to collect more information based on what grounds these resignations were made by these auditors. Queries have been sent under Section 143(12) of the Companies Act based on about 15 complaints that were received by the central government. According to Section 143(12) of the Companies Act, if an auditor during its course of audit finds out that there's any fraud undertaken by a company or any of its employees, has to report immediately to the central government. Recently, auditors of Vakrangi Limited, Atlanta Limited and Manpasand Beverages resigned citing inadequate reasons days before signing the annual accounts of these companies.
And there's another company that's heading for insolvency processes. The Mumbai bench of the National Company Law Tribunal admitted Videocon Industries under the Insolvency and Bankruptcy Code, and that's according to sources. Remember, SBI had filed the insolvency petition against the company in December last year, and that was following directions by the Reserve Bank of India that essentially prompted banks to put a whole host of these large stressed assets under the insolvency process. Vishwanath Nair, though, gets you all the latest with regard to this company.
The Mumbai bench of the National Company Law Tribunal admitted Videocon Industries under the Insolvency and Bankruptcy Code earlier on Wednesday. Now remember that this case was originally filed by State Bank of India at the NCLT back in December 2017, but the case has been facing multiple delays. Videocon Industries was listed in a list of 29 stressed corporate accounts, which the Reserve Bank of India had listed as part of the second NCLT account list, which was sent to bankers in August 2017. Bankers had been given 6 months to resolve all of these cases outside of the NCLT. failing which by December 2017 these cases should have gone into the NCLT and gotten admitted and been resolved there. But now finally Videocon has been admitted, and Anuj Jain from KPMG has been appointed as the interim resolution professional in the company. Remember, Videocon Industries has also been under stress for a very long time. Since 2016, bankers have been meeting under the Joint Lender Forum network to try and resolve the stresses within Videocon Industries. However, efforts there have not really resulted in anything material. In fact, Videocon Industries had tried to sell some of its assets, monetize them, and then repay the lenders, but even that did not lead to any serious results. Eventually now, the company has gone into the insolvency and bankruptcy process. Still, it remains to be seen whether the promoter will come in and try and object against this decision by the NCLT, and whether this case actually goes through the whole insolvency process and gets resolved.
All right, we're going now to Nikki Mirchandani, who has all the stocks that you have to pay attention to and trade today on account of them being in the news. Morning, Nikki.
Hi Alex. To begin with, it's going to be Sadbhav Infra, which has the board has given nod to raise around 3,000 odd crore via issue of securities. Also, we will keep an eye out on Hudson Agro, where the board of directors have decided to fix upon the right issue date, which begins on June 4th and ends on July 5th. It's going to be issuing as much as 95 lakh partially paid up shares at a price of around 550 per share, 55 per share, which means a good 20%, more than a 20% discount from the current market price. Lemon Tree is another stock on our list today, where it has signed an agreement for 104-room property somewhere in Madhya Pradesh. And also we have Dollar Industry, which has received BSE nod to list its share starting today. Also we'll keep an eye out on BEPL, which is going to be resuming the commercial production in one of its plants in MP after the fire accident. And also keep an eye out on City Union Bank, which is expected to meet various fund houses, including the likes of ICICI Prudential, Kotak and Sundaram AMC.
All right, thanks so much for that, Nikki. Now, Forbes has released their list of the world's top paid athletes for 2018, with the top 100 earning as much as $3.8 billion combined. The list also featured India's cricket captain Virat Kohli. Here's a special report. So there you go. Sports does pay. I should have stuck with playing football. All right, that's all we have for you on Daybreak. But up next is all you need to know. Thanks so much for watching. This is Bloomberg Quint.